Hello guys. um, I'm going to break down the trades I took yesterday and how you would have taken them. So I'll just do a quick video so we don't waste time. So this was my M15. Price reached a higher time frame key level. I think it's on the marked it from the daily. Let's see. Weekly. Yeah, it was the weekly key level. It was the weekly key level. No, what's this? Now I can't see because of too many drawings. Okay, yeah, it was the daily key level, as you can see. That's an unmitigated wick. That's where price got to. Then I went to my H4. I just refined it from there, which is this order block. That's why I put it there. Okay, so that's where it got to. Then on my M15, if you see, price reacted from that zone, okay, and pushed down. So let me just remove this. So price reacted to that zone, and there was massive price action on lower time frame. Couldn't get anything, but when I went to my M1, that's where I took this entry, this one. So as you can see, price created a QM here and broke down. But let me not explain, excuse me, let me not explain this entry because it's just a bit advanced. It will confuse you. The good entries or the easy entries that you should catch are the ones that I'll try to explain so you don't get confused. So now, look at here where we are. Price took out some liquidity here. All of this, okay, took out all of that. And also, it took this low. Okay, right. So when price took all this liquidity here, there was no lower time frame set up to enter. So there was no point to look for buys when price took this liquidity. But when it took this one, okay, we go to our lower time frame, okay, which is our, I went to M5 and M1. All right, let me just go directly to M1. So as you can see, it took this liquidity here that we saw on M15, took out that one. Okay, then what did it get into? Got into some unmitigated POI here. This one. So if we go to M5, we'll see it clearer. Let's see where we here. Here. See? This is an imbalance fill price action. Here, imbalance, and that's an order block. So that was my POI. See, it tapped into that. But you don't just enter directly because it's a POI. You just wait for confirmation because as you could see here, it was taking out liquidity and it was just going down. It was taking out liquidity, just going down. You could do the same here. So now, when you go to our M1, this is what I had. You see, we have a break of structure here. Okay, you can put a line, and we have a major one here. Okay, so a lower time frame break of structure can indicate either a pullback is starting on a higher time frame, or it can be a continuation signal for a higher time frame, or it can be just a T1 for the higher time frame. So you need to understand that. So this one was a higher time frame pullback. Okay, so playing a higher time frame pullback, and I had my range from this red dot to that one. So as you can see, there was no internal range liquidity here. There was no internal range liquidity here. So if there is no internal range liquidity, if price is coming back and does not generate any type of liquidity in here, it will just break this, as this will become a trap. This will become a trap. Okay. So I just said, if price drops like that and does not create liquidity, this zone becomes a trap and price is likely to break it, then create another setup. Okay, but what happened here? Price created our T2, came down and then created our internal range liquidity. So now this validates this POI. So if that's valid, what's the closest POI to that liquidity? Could have taken this one, candle, or the body. So I took the body because of the risk reward. As you can see, this was a 4.3 pip stop, and our target, our external range liquidity, the risk reward was 3.1. Because it was a slow day, you know, you can take those small trades. But anyway, the entry was there, and then target profit is our external range liquidity of the range. So within this range now, as you can see, price is moving up. Let me just delete this as you've seen that here, TP. So as you can see, price was going up. All right. Then when it got to the top here, it gave me a QM. So this QM signals a failure swing or a range within a range. So now, if this is a failure swing, price is supposed to come and take this out, because this would have failed to take out this high. Okay, but let's look at this. For me to validate this as a failure swing, I should have rules. So the first rule is, in this initial leg, price should still have something to take out, a reason to come and take it. For example, let me show you. So if the range is like that, okay, like that, then it creates a QM, and it goes like that, like that, like that, like that. Then it creates current QM now. Okay, then it does that, and then does that. Then I enter here, and it goes up and gives me a failure swing here. Okay, so let me mark this up. That's a QM. That's a QM. All right, that's my bullish range. Okay, let's say this spot here, this one, is here where I entered. Okay, let's say that's the spot. So we have a VOS here. Okay, then we have this range. All right, so I enter here. I get a confirmation and enter here and target my external range liquidity. But if price gives me a QM here, this becomes a failure swing, and I expect this low to be taken. It becomes liquidity, because I still have some liquidity that has not been taken here. Okay, so I'll anticipate that this will fail, and my entry should come probably on a POI that's just below this liquidity, because this then makes all of this liquidity. So the entry will come from here. And still target our external range liquidity, because this is our range. Because this is our range. This is our range, and that's our external range liquidity. Okay, so that's still our target. So it can give me an entry here to target there. If it fails, it will come and give me another entry, because the range is still valid. Okay, so let's go back to the price action. So here, it gave me a failure swing here. So it was either going to come and take this low out, but that was not going to happen because it had mitigated this week. in the range, and there is no more internal range liquidity to be taken from, like what I said from this example. So now, gave me a QM, then gave me an opposite QM. Okay. After that, delete this. After it gave me an opposite QM, it gave me a range which I marked as the blue range. So what do we have here? Run on liquidity, break of structure. Run on liquidity, break of structure. This is an internal range. Okay. Then what did I see? Because this gave me a failure swing, I knew it would come and take some liquidity out here. Okay. So I marked this as the liquidity. But our rules say this is our external range liquidity of the blue range. Okay. So now, price came up and took all liquidity in this range. That was the entry, direct entry, 2.2 pips stop loss, and our target was a hit. So then another entry would have been here. Let's do this. Right. So a step trade now would have been here. So if you see here, we have a POI, which is an imbalance field price action here. See that? That's an imbalance. So within this range, it was taking all this liquidity to come for a buy here. But price did not get there. It just took the liquidity and it did fly away. But personally, I wouldn't take this as a stake trade because I don't trust this POI. I don't trust this POI. Why? Because it's generating liquidity here. It follows. Okay. I would rather trust this one, which is an unmitigated wick, so the entry would be here. But again, this was on break even, and even if it came to take me out, I wouldn't take this. I would consider that day done. But yeah, so that's the breakdown of this trade and of this trade. As you can see, this is the direct entry. Okay. Liquidity above the POI, enter, exit, external range liquidity. So I hope this helps, and thank you guys so much for watching.